I mean, if your internet's too bad, we probably won't be able to do this. Could you hear me?
You could try the other room. I'll just try to go on in here.
Could you hear me? I could hear you fine. What's up? Could you hear me?
Yeah.
Cool. Yeah, I don't know. That must be Dad's connection or
You
whatever. Yeah, is our internet not good enough to do this?
I mean, I hear you fine.
I
think
can
we're
hear
good.
you. Okay, cool. And I'll add Bob just in case here. But yeah, quick rundown here for our viewers. We're doing this twice a week now instead of daily, and we're just coming on here at this hour, Mondays and Thursdays, not necessarily for a full half hour, just to kind of go over what's going on in the markets and what we're doing. Obviously, everyone's awaiting on Airbnb to go public right now, and they'll probably go public any minute. DoorDash had their IPO yesterday, and it was a pretty successful one for them. And the market really flushed out hard yesterday, and this morning looked like it was going to do the same. And it's been kind of choppy all day. I've just been watching the QQQ and just keeping an eye on it because it seems like the market's going to go with that. And yeah, I got Twilio, Fastly, and Donkey Kong pulled up as really the three picks I've been watching the most. DraftKings is kind of bouncing all over the place. Fastly and Twilio are just such beasts. I think they're the two greatest plays in the whole on-demand gig economy because if you look at the vendors that these huge companies like Airbnb, DoorDash, Lyft are paying their monthly bills to, it's Twilio, it's Fastly. These are companies behind the scenes that are powering these companies to do what they do. And I mean, no one ever talks about Twilio. They're up 7.5% today. I think they're at all-time highs. Obviously, yesterday, everything came down. Dad, what are your thoughts? What are you looking at today?
Well, I think there's been a lot of money coming out of a lot of different names to get into these IPOs. And that seems to be the theme all week. And you're right, those two names have been phenomenal. Because they don't talk about it, they actually have more upside because people aren't just in them for a trade. I'm watching Apple, which got down to the 120 and change level early this morning and reversed. So that's one key one. Microsoft is another one, tried to rally and it, lost its luster again. Kind of looks like a head and shoulders chart, which is negative. But these things turn on a dime. I mean, the EV space was getting killed, then it turned around. Now it's kind of in the middle.
Yeah, I mean, even right before we started talking, it looked like the market was heading for another meltdown. And I'm not saying it's not, it might still, but now it's heading back into positive territory. Tesla is obviously an interesting one to watch. It briefly went negative, but really just bounced right off of its moving VWAP line and now is heading back up. So, Mike, what are you looking at? I know you bought some more penny mushroom stocks. Any of them?
Yeah, I've been, I mean, overall, I think that space is getting set up for a huge year. So I'm long. I day traded SHRMF, which is Champone Brands, made a quick buck on that this morning, waiting for a pullback. I'm a big holder of MMEDF and CMPS, and they're definitely, it seems like there's a stock offering going on with MindMed, the MMEDF, and I think, going to be setting up to be traded completely differently here, heading into the next few years, really. So I think it's still down. I know you're in on that. That stock's run up a bunch. It should still keep running. So unfortunately, lesson learned, bought a couple of GameStop options the other day, never doing that again. That was an epic disaster. I still am shocked the stock's not soaring, with basically proving the model's working in the e-commerce. But for our viewers, you're better off selling options than buying ever. It's a sucker's bet buying call or put options any way you spin it, unless you're hitting a jackpot with timing going into earnings with a run up. You're better off selling options. So that was a expensive lesson for me, but hey, you got to act on conviction sometimes. I'm not going to change that.
GameStop though is interesting because it did kind of hold its long-term uptrend, and today it looks like it's bouncing back a little. There's obviously a ton of people that are short this name. So if it doesn't go down to their level of expectations, they're all going to start unraveling their short positions.
I mean, it's a grand slam long term. That Ryan Cohen, the founder of Chewy, that owns 10% of that company, is shifting the entire industry. They're trying to be the Amazon of gaming and entertainment, and I'm very confident he'll pull it off. So, yeah, I mean, if you want to, it just might be a little ahead of the game.
So let's talk about Airbnb for a second here, because that's really the most exciting thing. So they're supposed to be priced at 68. I mean, they are priced at 68 a share. And I have the level 2 pulled up right now, and you could see all the different bids coming in. I mean, this stock looks like it's going to be over 200 at open.
Yeah.
I don't know if that's going to happen. Maybe like 175, maybe 180. We saw what happened with DoorDash yesterday. DoorDash had a private valuation over the summer that valued them at $46 a share, and they're trading, I don't know what they're doing. $175 a share, down 7%. There's a lot of different ways to look at DoorDash. And on one end, you could look at them and say they should be a tenth of Uber's valuation. And I don't know if that makes DoorDash too expensive or Uber too cheap. On the other end, you could look at them as a company that has ambitions way beyond food delivery. They announced a partnership with Petco this morning, and you can kind of see them being almost like the on-demand Amazon. And I'm not saying that that's what they are going to be, but that's where it's so interesting, because you have people saying that they need to cut in half. And I think I'm one of those people, but then I could also use my imagination and think about how a company like DoorDash could easily be valued at $250 billion here in a few years. So I don't know what you guys think about that. Obviously, we're biased. We compete with them, but they had a good IPO, no doubt.
I mean, hey, the more they're worth, great. I mean, that justifies what we're doing even more. I think when you have an ecosystem of users for delivery, it's very appealing. And it's clear they're not sticking to just food for a reason. When you look at margins and everything outside of food, it's way better. And pet food, that Petco partnership, especially during the pandemic, with how many more pet owners there are, you've got to love that for DoorDash. I think that's a great partnership for them.
I think the key word you said was imagination, because that's what you need to be paying these ridiculous levels. And Airbnb should be called Hot Airbnb after this. I mean, 200, give me a break.
Yeah, I mean, I think.
Yeah,
look, I'm not touching Airbnb at these levels. It's crazy, the action that's about to happen here. Like, it's fun though to watch it when it happens.
Look, this is where it pays to own mutual funds, and any mutual fund that is in the limelight, like a Fidelity funds, for example, they're going to get all these IPOs. So they're cleaning up short term on all these names. They buy them all, and they're probably the main seller today because they're never going to accumulate enough shares in any of these IPOs to have a solid position. So they're just taking the profits and running. That's who's selling it to everyone else. Because these things come at 68, open at 200. Thank you is what Fidelity is saying, and anyone like Fidelity, they can get shares on the IPO.
Yeah, I mean, look, you make a great point, and you were a part of that game for a while, so you know what goes on behind the scenes. There's people that are just getting rich selling to retail traders. And then, what I keep thinking about is when the lockup period's over and the insiders are able to sell their shares, I can't imagine it being good. I don't know what the dates are, but you look at DoorDash, anyone who's locked up in that name, who's got it at $15 a share right now, they're selling as soon as they can. And there's probably
which won't be for a while though. Like we could even look at my buddy with the what is it that I told you guys, HYFM, that hydro company that went live today. He can't get out of his stock for 6 months. So he would have loved to jump out of that thing right out of the gates today and be retired. But there's
those are typical lockup periods. And, if they're chomping at the bit to sell, then it's overvalued, right?
Yeah, no, you're right. Dad, what were you thinking yesterday during that midday reversal? I mean, it felt like we were heading for another 8 to 10% correction here. And maybe we still are, but I definitely woke up, looked at the futures, and was looking for opportunities to short and tried a couple. And honestly, it didn't work out at all and quickly changed.
Yeah, there's still so much money to be put in that the sell-offs are just really short-lived. And it's difficult to find shorts because they're so hard to stick with. I mean, bad news comes out on a name, it goes down for 5 minutes, and then it's back up in their face. Yeah. Very difficult to short here.
But I think they're also on the other end of that I think there are good opportunities in some of these sectors with, hidden gems that are never talked about with the cloud space. And I know I brought up to you guys Dropbox, DBX, which I bought earlier this week. And if you look at their chart, they've been kind of like a sleeping giant in the space that's ready to erupt. And no one ever talks about them. You'll be hard pressed to find someone that hasn't used them. And the stay-at-home culture has helped them immensely. So I'm the long-term holder of that now. Got in at the 2050 range earlier in the week. And I think that's acting well.
Yeah, I think it is too. It's really interesting, that chart. It's kind of...
And then, no one talks about them. It's kind of like a Zillow where it crushes and everyone's just like never bringing them up.
Yeah, I don't know what to make of DBX, but the chart does look appealing, especially now that it's back over 20.
Yeah. So I think that's something to think about, are these sectors where there's certain names that get all the attention. Find another name that you can get at a discount with what it's trading at.
And Dad, your call option strategy has just been so great. Like being able to sell call options on, I guess you could say days like today, depending on what positions you're in. But like, for example, Twilio, I'm long Twilio and I have call options for 330 that I sold at 15 or 16 a share. I'm probably going to cover those and then sell them for $30 a share, which is where they are now. And I'll take a little hit, which is good for taxes at the end of the year. I'll pay less taxes and then I'll redo it. And, yesterday, those positions were up huge. Like DraftKings, yesterday, I was able to, well, I shouldn't say able to. I don't know if it's going to be a good thing or not. But in the morning time, I was able to cover the call options that I sold yesterday, which were the $55 for 330 that I sold. They were trading down to like 230 yesterday at the open. So I covered them. And then after the New York gambling news got announced and DraftKings went up to like over 53, I was able to resell those for $4 and then bought them back again later in the day for under $3 again. And now I'm looking to sell them again if DraftKings could rally. But it's just amazing how those are just such a great way to hedge the positions. And you see it on days like yesterday and possibly today.
Yeah, I mean, the beauty is how much premium are in some of these high-flying names that have moved dramatically from day to day. You're just getting ridiculous premiums to be able to take in money. And I go back to that LAZR, which has gotten hit hard in the last 2 days. But if you sold the 50s, you got a lot of room and you could still sell them and do well. Even if you bought the stock here, you're still getting over $3 for these things. January 50s on a stock that trades at 35.
Yeah, it's unbelievable.
It's unbelievable, right? So I think you got to take advantage when you see those kind of situations. And they're all around right now.
Well, that's all I got, guys. I know we're all busy with other stuff, so we're doing this less. But you guys got anything else to add, or should we wrap it up?
That's good. Same names, BHP, GE, Ford, all look interesting longer term. As far
I'm
as
liking Ford today at these levels with where it's at now. I think it's a good opportunity to add to the position or get in if you don't already own it.
You know, these stocks are probably getting hit with the EVs today. Ford, not all of them.
So quick! It's so crazy how quickly things could change in the markets. That's all I'm going to say. When you look at what happened yesterday in the morning, and then the afternoon, and then this morning, and now, it's you know, you got to kind of have limits set here and not do anything stupid. That's for sure.
And I think Dad brought up a good point. Thinking about in the future with high flying IPOs with DoorDash yesterday, Airbnb today, you know, it's something to think about. Naturally, people are going to be taking money out of other names so they can play those cards. So that's something everyone should keep in mind when you know a big company is about to go public. There's going to be a shift, at least short term. So it could also, there'll be a great buying opportunity when you look at an Apple. Those big headphones that just came out, the Maxes.
Those are going to be so sick.
Yeah. So that should be huge for a stock like that. You saw a sell-off yesterday because naturally you had institutional money getting into Dash and Airbnb and getting set up for the end of the year. But it should provide an opportunity in a name like Apple to cushion. And even on a Facebook pullback off of a probe that we know the game with them, they get some government probe, the stock falls off and nothing happens except a good buying opportunity.
Yeah, I agree with you. The Facebook thing feels like Groundhog Day. So, all right, cool, guys. Well, I'll talk to you guys later.
Bye.
Yeah.